Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called the EMA Ribbon Expansion Breakout. This strategy is built around a three-layer moving average ribbon, a fast, a mid, and a slow exponential moving average, and it's designed to study the moment a quiet, coiled market begins to expand into a trend. Over the next several minutes, we'll unpack how the ribbon works, walk through the exact entry and exit logic, read the actual code, and follow a chart example step by step. Let's get started. So what exactly does the EMA Ribbon Expansion Breakout do? At its heart, this is a trend-following approach that watches how three exponential moving averages behave relative to one another. Picture three lines drawn on the chart, a fast 8-period average that hugs price closely, a mid-21-period average, and a slow 55-period average that moves more gently. Together, these three lines form what traders often call a ribbon. When the market is quiet and directionless, these three lines squeeze together or coil. When a genuine trend begins, they separate and fan out in order. This strategy is designed to study that transition, the shift from a compressed, balanced market into an expanding, committed one. The expert advisor can be applied to any symbol and time frame you choose in MetaTrader 5, from currency pairs to metals and indices, though as always the behavior will differ from one market and one time frame to another. It also leans on the average true range indicator, a common measure of volatility, to keep everything proportional to current conditions. Rather than using fixed distances, the strategy sizes its compression threshold, its expansion threshold, its stop loss, and its take profit all in multiples of that average true range. Who might find this style of approach interesting from a learning perspective? It tends to appeal to traders who prefer momentum and trend continuation over picking tops and bottoms, and who are comfortable waiting patiently for a clear setup rather than trading constantly. Remember, this video is educational information only. It is not financial advice, and it is not a recommendation to trade. Every strategy, including this one, carries real risk, and losing trades are a normal part of trading. With that in mind, let's look at how it actually works. Let's break down the mechanics of the EMA Ribbon Expansion Breakout, condition by condition. The strategy evaluates everything on closed bars of your chosen time frame, so it waits for a bar to finish before making any decision. This helps it avoid reacting to noise inside an unfinished candle. For an entry to be considered, three independent conditions all have to line up. The first condition is ribbon alignment. For a long setup, the fast average must be above the mid-average, and the mid-average must be above the slow average, a clean, stacked, upward order. For a short setup, that order is simply mirrored, fast below mid and mid below slow. The second condition is prior compression. The strategy looks back over the last several bars, 6 by default, and measures how tightly the ribbon was coiled. Specifically, it checks whether the distance between the fast and slow averages recently shrank below a fraction of the average true range, defined by the CompressFactor of 0.8. In plain terms, it wants evidence that the market was recently balanced and quiet before it moved. The third condition is fresh expansion with a momentum push. The distance between the fast and slow averages must now be widening compared with the previous bar, and it must have grown beyond the expand factor, which is 1.2 times the average true range. On top of that, the closing price has to finish beyond the fast average, above it for a long, below it for a short. That final check confirms that price itself is committing in the direction the ribbon is pointing. When all three conditions agree, the strategy signals an entry. Now let's talk about risk and exits. Both the stop loss and the take profit are set using the average true range at the time of entry. The stop loss is placed 2 times the average true range away from the entry, using the SlAtrMult multiple. The take profit is placed 3 times the average true range away, using the take profit multiple. That gives a reward to risk shape of roughly 1.5 to 1 on a completed target. There's also a built-in early exit. The strategy allows only one position at a time per magic number, and if the ribbon flips its stack against an open trade, for example, turning bearish while a long is running, the strategy closes that position early rather than waiting for the stop. It's a way of respecting a change in the underlying trend. Let's read the actual MetaTrader 5 code on screen, just as you'd see it in the meta editor. At the top, we have the input parameters: fast EMA, mid EMA, and SlAtrMult has set the 3 ribbon periods, 8, 21, and 55 by default. ATR period is the average true range length. CompressFactor and ExpandFactor define how tight the coil must have been and how wide the expansion must be, both measured in multiples of that range. CompressLookback is how many bars back the strategy scans for that prior squeeze. SlAtrMult and TpAtrMult set the stop loss and take profit distances, and lots is the fixed position size. Below the inputs, you can see how the ribbon state is read on the last closed bar. Bull stack is true when the fast average is above the mid, and the mid is above the slow. Bear stack is the mirror image. The long signal combines bull stack with a recent compression, a fresh expansion, and a close above the fast average. The short signal requires the opposite on every count. Now look at the 2 trade blocks. When the long signal is true, the strategy reads the ask price as the entry, then places the stop loss below it at 2 times the range, and the take profit above it at 3 times the range, before calling trade.buy. When the short signal is true instead, it reads the bid price, sets the stop loss above and the take profit below by those same multiples, and calls trade.sell. Notice both sides are perfectly symmetrical, the same logic, simply reflected. Now let's bring the whole strategy to life on a chart. On screen you can see our candles, and drawn over them are the 3 moving averages of the ribbon, the fast line in gold, the mid line in blue, and the slow line in gray. Watch how they behave, because their relationship is the entire story here. Look at the opening stretch of candles on the left. Price is drifting sideways in a narrow range. And notice how the 3 ribbon lines are pressed tightly together, almost overlapping. This is the compression phase, the coil. The market is balanced, neither side is in control, and the strategy simply waits. It does nothing here, because a squeezed ribbon is exactly the low conviction condition it wants to avoid trading into. But it's taking note that the coil has formed, because that recent squeeze is one of the conditions it will need later. Now watch the next candle push firmly upward. This is where things change. The fast gold line lifts away from the mid-blue line, and the mid line pulls above the slow gray line. The ribbon is fanning out in clean bullish order, fast over mid over slow. At the same time, this strong candle closes above the fast average, confirming that price itself is driving higher. All 3 conditions have now aligned. The prior compression, the fresh expansion, and the close beyond the fast line, so the strategy signals along. You can see the buy entry marker appear right there as the ribbon opens up. From that point, follow the candles climbing. As price advances, the gap between the ribbon lines keeps widening, which tells us momentum is being committed to the upside. The stop loss sits back below the entry, a measured 2 times the average true range away, giving the trade room to breathe against normal wobble. The take profit is set further out, 3 times the range in the direction of the move. A few candles later, price reaches that take profit target, and you can see the take profit marker where the long is booked. Notice the reward to risk shape here. The target was placed half again as far as the risk, roughly 1.5 to 1. Now the market cools off. Watch the ribbon lines draw back together in the middle of the chart as price stalls and pulls back. The fast line rolls over toward the mid and slow lines, and the ribbon coils a second time. Once again, the strategy is patient. It waits for a new setup rather than assuming the previous trend will simply continue. Then comes the mirror image on the downside. A strong bearish candle drives lower, and the ribbon flips. The fast gold line drops below the mid-blue line, and the mid falls below the slow gray line. Now we have a clean bearish stack, fast under mid under slow, and this decisive candle closes below the fast average. The recent coil, the fresh downside expansion, and the close beneath the fast line all agree, so the strategy signals a short. The sell entry marker appears just as the ribbon fans out downward. From there, follow price sliding lower, the ribbon widening in the opposite direction as sellers press their advantage. This time the stop loss sits above the entry, again 2 times the range away, while the take profit waits below, 3 times the range in the direction of travel. A few candles on, price reaches that downside take profit target, and the marker shows where the short is booked. Once more, the same measured structure, simply reflected. And that is the essence of the EMA Ribbon Expansion Breakout, patiently waiting for the coil, then studying the fan, in either direction, and always framing its risk around volatility. let's wrap up what we covered today. We explored the EMA Ribbon Expansion Breakout, a trend-following expert advisor for MetaTrader 5 that watches a 3-layer moving average ribbon squeeze and then expand. We walked through its 3 entry conditions: ribbon alignment, prior compression, and fresh expansion with a close beyond the fast average. And we saw how its stop loss and take profit are both sized from the average true range. Remember, everything here is educational information only. It is not financial advice, and it is not a recommendation to buy or sell anything. If you found this breakdown helpful, please like the video, leave a comment with any questions, and subscribe for more MT5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.